Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight we have a little bit to talk about. Inflation at a 3-year low as of today. What does that mean that the Federal Reserve will be doing? You guys tell me. We have a lot to talk about because this is exciting. You ready for that bull run on several asset classes? Well, stay tuned because the Fed rate cuts is almost assured in T-minus 30 days. And are you buying stocks? Are you buying real estate? Are you buying any other asset classes? Let's talk about it tonight on the SSN Nation Wealthy Wednesday night live stream. Stop struggling now, gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, everybody. Thank you so much for being here on this Wednesday night live stream, the SSN Nation style. Make sure you smash that like button, as I've already mentioned. Make sure you share the videos because you never know who's looking for information, who's not understanding what information they are missing could be valuable for them monetarily, financially, their future, their family's future. You just never know. If you get in at the right time, right place, this is it. You have every chance to make moves over the next 6 months that can change your life a year, 2, 3 later. So let me welcome you once again, and let me see who's in the house tonight. And if you can't get in the chat room tonight, there's a reason. On Wednesday nights, only members of the channel, you'll see those with the icon like Yahweh J. They're the only ones that can be in the chat room on Wednesday night. That's one of the perks of being a member of the channel. And also, welcome Yahweh J to the SSN Nation Wealthy Wednesday night live stream. And with that icon, I humbly appreciate. And he brings the tagline, hello, SSN Nation. Hope everyone is doing well. Received notification, saw the trailer, and he did smash that like button on the way in. Thank you so much. We got a lot to talk about. I'm going to start off with what Brian P. sent me earlier today, because this is what's going on in America. You are about to get screwed over in the next 3 years, and you don't understand where it's coming from. We've already identified where it's coming from, and I'll say it right now, right here. Insurance going up, or you're not going to be covered. Property taxes going up, or you're going to have your property taken if you don't pay your property taxes. That's 2 of them straight out the box. And number 3, there's no way around the price of goods and services going up in a capitalist system. They could be coming down, but in the next 3 years, they will rise again because companies still want to make billions of dollars worth of profit. Get a clue, please. So therefore, you have to have passive income coming in, assets you're going to have to buy, and your income's going to have to be, your household income's going to have to be over $150,000 just for you to feel comfortable. You're going to have to actually be at the number 3 years from now, 200,000. Have I scared you enough yet? Well, stay tuned because I'm about to show you why you're going to be afraid. Victor Marrero, welcome to the SSN Nation Wealthy Wednesday night live stream with that icon I humbly appreciate. And the retiree is in the house, getting ready to go on his worldwide tour with his loved ones. And he brings the tagline this evening. Hi, all. Let's do this. That's what we're going to do, ladies and gentlemen. We bring the cold, hard facts up in here. We know you can't be looking out for everything. You can't be everywhere. Most people have a job. Most people have to come home and do some things. You don't see what's going on at the stock market, for instance. You don't see what's going on behind the scenes with the Fed rate cuts coming and saying the inflation is all three-year low at 2.9%. I told you guys over the last 8, 9, 10 months that the Federal Reserve wasn't going to increase the interest rate after they didn't at the end of last year. All they're going to do is let it sit. They're going to stop raising interest rates. And over the year, because the prices are already high, so I'll give an example in case we have new people here. If inflation is 10%, and then what the Federal Reserve should have been doing is increase the federal funds rate, but they don't, then how can you make it go down? Here's how you make it go down artificially. The prices went up 10%. And because we did raise the interest rates over the last few years, we feel we're going to just stop right now and see what happens. But we're not going to see what happens next month because we're still going to be at 10%. We're not going to see what happens 4 months later because that's still going to be 9.5%, let's say. We will wait a year because then after a year, we already went to 10%. So if we say 2.9% more, bingo, we solved the equation, when in fact they solved nothing. The prices still went up 10%. We got to go back down 8% in order for it to be 2.9% or 2%. We didn't go down. All that happened is your prices just stayed the same, may have dipped a little, but the fact of the matter is now I can go back and say, hey, it's only 12.9 now. So it only went up to 2.9 over the last year or two. So we'll just call it the last year. It only went up 2.9%. But to you and me, that's 13% in 2 years. That's no winning combination, is it? So this is what's going to happen because the Federal Reserve is going to decrease interest rates. And by the way, quietly, mortgage companies have already reduced their interest rates, some below 5. If you live in a Pulte area, Pulte is giving their owners or new owners 4.2, 4.5, 4.9% loans if you buy through them. It's already under 5. It's unbelievable. This just tells you they could have always reduced the mortgage rate. But see, they have us all fooled out here, right? They don't have to go by the federal funds rate because they're independent. But that's another story. So I want to thank everybody for being here. If you can't get in the chat room, make sure you know in order to get in the chat rooms on Wednesday night, you have to be a member of the channel. So become a member of the channel. I'd greatly appreciate it. We had a new member join last week. If you'd like to be a subscriber, please subscribe to the channel. Victor Morel says, actually, for a couple, I heard today on the business channel that you need $189K yearly salary in order to have room to breathe. Victor Morero, he's on top of it. See, this is the kind of stuff. In fact, Business Channel is where he got the information from. I did not, but I'm glad they're actually finally telling the people that you will need $200,000. I'm glad this is coming up. You or your household will need in 3 years, well, 2 years, it better be at 200 because Victor Morel is exactly right what the Business Channel is saying. In today's numbers in 2024, you, according to them, a household income needs to be 189. 70% of the population is living paycheck to paycheck. That means it's wiped out the middle class already. The upper middle class is next. You're going to have to be above 200,000 in order to breathe comfortably. The numbers don't lie. When prices increase about another 10 to 20% because corporations have to make their profit over the next 3 years, let's say 4 years, what does that mean for your salary? Your salary is going to have to be, just like this says 189 is what they're saying so you can breathe. It's going to have to be 200 or more as a household income, you as an individual or a family. That's what's going to have to happen. So I'm very happy you mentioned that, Victor Marrero, because again, I keep trying to tell people, once again, if you're new here, I've been telling people what's going to happen in the future for the last 5 years. We're now going to go another 3 years, and you better be making about, what's that mean, 17 G's a month? And I know some people are going to go, what the hell? That's a lot of money. Well, it used to be. Not anymore. And I'm going to show you why right now. Not anymore. Oh, here we go right now. Here we go. 2.89% U.S. inflation rate compared to 2.97% last month. It's going in the right direction. Fed is cutting next month. How does that impact you? Your stock and ETF portfolio will jump up in value. Exactly. He's got it right. There's a correlation. That's because that allows the big boys, the multi-millionaires, the multi-billionaires, they and corporations get to borrow at a lower rate now. So they go on a spree. Remember, let me ask you guys something. This is common sense when you really know what's going on. If you are an executive in a corporation and in your corporation, it says, well, you have an extra 1 million shares that we're going to give to you if the stock price goes from $20 a share to $35 a share. How can I make the stock price go from $20 a share to $35 a share? I have to do a few things. I have to do something that puts a spark into our company. So that means I might have to do a partnership. I might have to make an agreement. As long as I get some newsworthy information out there. But the easiest thing I can do as a corporation, I just go to whatever bank, whatever Fed, whatever brokerage accounts. I can just say, hey, you know what? I need X amount of dollars at a certain interest rate, which the Feds will give you an interest-only rate for 10 to 15 years. And then what do you do with all that money that you borrow? You go buy your stock. So while people are buying the stock and it goes up $1, $2, $3, all of a sudden there's a run. And then you make an announcement that you're doing something. So the run continues, but you're buying up your own stock. You're buying at a higher price. You're not doing this, I'll put in my price that I want. You're just going, well, the stock went up to $22 a day. I'm buying about 50 or 100 shares for an extra $1. And the next day, an extra $2. I'm buying 1,000 shares for an extra $2. Now my company's buying 5,000 shares for another extra $2. Everybody's going, oh my God, there's a frenzy. You should get in. You should buy. Now you have the ordinary citizens, the OCs, us thinking, oh my God, we better jump in. So as soon as it triggers the higher price point, ta-da, I get my 1 million shares. My 1 million shares is worth $35 million. You guys get this yet? This is what Elon Musk does. Study what he does. He always has something to say. Robo-taxis, 2017, here it is, 2024. Tesla truck, 2019, ready in a year, under 50K. Here it comes out now. All that, and he has his options. That's what happens with him. If the stock price goes up to a certain number, you can give me my $50 billion, right? Or whatever his deal is. All I'm saying is you guys got to understand what's going on out here. You're being lambs to slaughter if you don't understand, but you have to be in the game with them. That means you need stocks just like the big boys. Remember, the top 10% of the wealthiest own 89% of the stock market. Where should you be? In the stock market. Don't deviate. Does not matter who you are. Start with $1, $5, $20. It does not matter. In fact, use the links down below in the description box on YouTube. There's Robinhood and Webull. If you've never heard of them yet, download both of the apps. Get your free shares of stock. What else can you do? Dividend stocks. We'll get into that shortly. Dividend stocks actually pay you monthly. Well, some of them do. Some pay you monthly, some pay you quarterly, some pay you annually, which is a year. But quarterly is 3 months. But you can deal with a lot that pay monthly. All right, especially real estate investment trusts, especially Well, we can always get into yieldmaxetfs.com, which is high risk, high rewards. But if you can get 20, 25, 30, 35, 40, 45% return on your investment, and that's been happening for over a year and a half, you might want to look into that, right? That would be very smart, especially when the Federal Reserve cuts the interest rates. It's going to be very, very smart, ladies and gentlemen. Just keep that in mind. All right. Here we go. California homeowner. Okay, let's set this up. You guys may or may not know that insurance companies, once you renew, they start doing things such as telling you, well, your house is your roof is too old. It's 10 or 15 years old. You need a new roof. Or they may say whatever else they want to say so they don't have to insure you. That's what's going on here. So then if they do insure you and they raise the price like Victor Marrero, 150%, doubled and a half, that's not insignificant. If you're paying $2,000 annually and then they come to you and say, hey, you know what? You're going to pay $5,000 now. That's a double and a half. You go from $170 a month to $500. Seriously? Damn near 450, 400, whatever. But the point is, that's a significant increase for somebody that might be retired and they have a fixed income. But here's what they're also doing to people. This backhanded BS right here. Notice spent $200K on remodel only to be dropped by insurer with a drone footage. That's right, ladies and gentlemen. They're bringing drones over to look at your house, pictures. And that's what they're basing on if you're going to be insured or not. But she had to spend $200,000 because the insurer said, we need this, that, and the other. This is crazy right here, ladies and gentlemen. Thank you, Brian P., for sending this to me. When Joan Van Curren of Modesto got a notice from her insurance company stating they would not renew her home insurance policy, she was shocked to learn why. She has AAA insurance. They discovered a substantial increase in hazards piling around her home. They made this discovery not from making a surprise property inspection, but instead from aerial images allegedly taken from a drone. Is this not crazy? Cost of living in America is still out of control. This is a whole nother thing. Use these three real assets to protect your wealth today, no matter what the U.S. Fed does or says. There you go. All right, I won't get into all that. She said the California AAA, flew a drone over the home. CBS Sacramento, of her call with customer service rep, it almost feels like someone's looking in your windows, you know? All right. San Francisco gets in, received a similar, okay. Van Curren wasn't the only one to have this treatment. ABC San Francisco reports CJ Svin received a similar notice due to aerial images taken of his home in Northern California. The Wall Street Journal says Cindy Picos also got a notice after her insurance company said her roof was in poor condition. The insurance company in both situations are CSAA, that's the California AAA. CSAA denied they used drones and surveyed covered homeowners and instead claimed they used property aerial imagery of homes to make risk decisions. Oh my God. This is what this is coming to out here, ladies and gentlemen. So imagine you buy the most expensive thing for most people is a home. And imagine that they're saying they're not going to cover you for insurance and something happens. Tree falls, lightning strikes, car runs into it. I mean, anything can happen. And imagine you not being covered and having to repair that out of your own pocket. And if you don't know how much it costs to repair and remodel, I suggest you start looking, because then you're going to be like, oh, hell no. You'll find out when you start talking about intrusion and getting things done, you don't have a cap. It could be 50,000, it could be 100,000, it could be 200,000. There's no cap. You have to replace walls, interior windows. You have to do all kinds of things. That is not just the interior of the house, like when you knock down a wall or something. It's pretty serious. Are insurance companies spying on your home with drones? Yes, they are, ladies and gentlemen. So this is going down, and an increasing number of cases, insurance companies are using eyes in the skies to not only determine the condition of insured homes, but to assess damages once a natural disaster comes through. So again, this is what's happening, ladies and gentlemen. Oh, here we go. 1 million starter homes are common in more than 100 towns in America, Zillow data shows. Well, this information is actually a bit old. There's 550 cities, towns that average $1 million for a starter home. It's not just 100. All right, just letting you know, it's not just 100. We went over this like a month ago. It's not just 100. The average price of a home will increase. I've tried to tell everybody the 442,000 median price right now. After they reduce the interest rates in about another year and a half, they're going to reduce it next month. But a year and a half from now, it's going to peak up. So homes, if you don't think you can afford a 400,000, you damn sure probably won't be able to afford a 650,000, because that's where this is going. In 2 years, the average price of a home should be in the six until it burns out and has another crash. But all I'm saying is it's going to go up to around 6 after this next bull run, in my opinion. We'll see what happens. All right. Average starter home nationwide is priced at $196,000 within reach for the median income household. Okay. All right. However, starter home prices have soared 54.1% over the 5 years. 54.1%. And this didn't even include a federal reduction in their rates to get your mortgage rates down to 2.9 or 3.1 or 3.5. This is crazy. What do you think is going to happen next time? You think it's going to be another 50%? Well, there you go. Now you understand my prediction. It's going to be 600. It's going to be 50% more. It's going to be on steroids this time, because people are going to realize this is the last chance. Unless you make $250,000 to $300,000. This is going to be your last chance, because you won't be able to qualify if interest rates are not 2.9, 3.5%. Because now, here's the numbers. If you make 600, if you have a house for 600,000, you're going to put down 60,000. In fact, we'll just do this real quick so everybody understands. Let's go to the mortgage calculator, shall we? We'll just make this simple for you. All right. I don't want that one. Let's go to just a simple one. So if you're going to buy a home, which I don't recommend, I recommend you trying to find a fourplex building that you get a loan from the FHA at 3.5%. And at least this way you have income coming in. That should be your first move. Unless you have, if you don't have passive income coming in, your first move should be to borrow to buy into a business that you're going to have passive income. Borrow to buy into real estate because you're going to have passive income. That's what's your first move, because that passive income you can ride for a lifetime. When you have a house, it's a liability. But let's get into what I'm talking about here. 442,000 at 7. Okay, I'm going to change the interest rate down to like a 4.3. So see, that's 2,100, 2,200. So that's just, let's call it 7,000. So right now your household income has to be 80, let's call it 90,000 with no credit card, no other credit. That's hard to do for most people. So let's just say you have to make like almost $100,000, right? Okay. Now, here's what happens when we go to 600,000. This is based on a 50% increase in price. That's 3,000. Now, you generally are going to have to make 9,000 plus per month. So that's 108 with no other credit, no credit cards, no car payments, no nothing. Most people aren't in that situation. So now you understand a $600,000 house is going to generally, for most people, you have to make like 175,000 or more, because most people have a $500 or $700 car payment. Most people have credit cards, generally around, what's the average in America, $3,000 or $4,000 balance. All that goes against you when they calculate if you can afford something. And so therefore you can almost figure it out. If you have 4,000 on your card, you got to make 12,000 more. And if you have a car that you're paying $6,000 per year, that's $20,000 more. So you just added roughly $30,000 to your already 109, 110 numbers. So you can easily see why you're going to get up to 175. Hopefully I explained that easily. And I wish they used to show something on here that I can't do anymore, but oh, I forgot. Hold on a second. I forgot. Includes taxes and fees. Here's the situation. They'll let you buy the house for that previous number, but then when you move in, this is how much it actually costs you when you throw in some taxes and fees and all that, 34 G's a month. So that's how you get caught, because they go, oh, we'll give you a loan for that based on this 30% model. Then when you move in, all of a sudden you're living paycheck to paycheck. It's because that extra $12,000 a year wasn't built into the model. All right, I'm just letting you guys know this is how they're keeping you poor. All right, let's see what else we got going on. I've talked long enough on this subject matter. Here we go. Victor Morrell, that's insane. Just to think that not too long ago, a 75K yearly salary was an excellent salary. Tell me about it, man. Today, you would need food stamps with that type of salary. It's sick. Yeah, exactly. Just think about it. People are living in luxury apartments, 2-bedroom, 1-bedrooms that are like $2,000-$3,000 a month. They have to make 3 times the amount. So they're already at a $2,000 luxury 1-bedroom apartment in most major cities, and some are higher. You have to make 6 G's a month. That's $72,000. That's crazy. Crazy. Just to live in an apartment. Back in the day, you would have a house, no problem, everything good. Joe Nay, another investor, is here. Welcome to the SSN Nation Wealthy Wednesday night live stream with that icon next to your name that I humbly appreciate. And he brings his tagline, good evening, SSN Nation. And how is everybody tonight? Everybody's doing well, man. Hopefully you are as well. And hopefully everybody that's watching this, if you can't get in the chat room, there's a reason why. Only members with an icon can be in the chat room on Wednesday nights. On Monday and Friday night live streams, everybody can be in the chat room. And he says, I got that notification, and he smashed that like button, ladies and gentlemen. Oh, I love that. Thank you so much. Thank you so much. And everybody who's here, make sure you smash the like button so the YouTube gods show us some love. That'd be greatly appreciated. Now, let's see what else we got to talk about. It's not over yet, ladies and gentlemen. Inflation at a 3-year low. Brian P., thank you for that news article. I appreciate it because it's in Cali, and people think that California is exempt from certain things. No, nobody's exempt. It doesn't matter what state you're in. You are not going to be exempt from this insurance crap costing you more money. You're not going to be exempt from your property taxes going up. Not going to happen. Where else are they going to get the money from? You know you have a Social Security number, right? Oh, I know some smart guys are going to go, I'm not a U.S. citizen. I don't have a Social Security number. That's all right. You got a number. You're paying into the system too, but you ain't going to get no benefits. Some people may know who I'm talking about. So Brian P., welcome to the SSN Nation Wealthy Wednesday night live stream with that icon I humbly appreciate, along with the news articles. You are welcome. Thank you, man. Brian P. says, hello, Eric. I hope all is well with you. Hello, SSN family. Yes, all is well, man. We hanging in there. We trying to make things happen. All right. He also says, smash that like button. I love it. Thank you so much, man. Greatly appreciate it. Okay. Victor Morrell says, I'm talking to a friend about the potential purchase of land and set it up for RV rental. Hey, I'm not mad at that. We'll prepare the lots with water and electricity. And what about the sewer? We can buy used small RVs and fix them up for rental. That's true. But don't forget about that waste, because you're going to need that too. But yeah, that's it. And then you have a picnic well, wait, did he say RV rental? Wait, is it going to be an RV rental where they can stay overnight? Or is it just an RV rental where you're going to let people rent for like holiday time? Because there's there's several different distinct business models, but which one is this? It looks like you're saying fix up, do rentals, but then that would be a seasonal thing, right? I mean, I don't know how popular renting RVs is, but I was thinking you were going to do an RV park where, depending on where you are, and we know how Florida goes. Florida is busy January, February, March, sometimes summer, and it gets busy January, February, March for sure. But the rest of the year, I'm not so sure that that's going to be a great business model. So, going to have to check some other businesses and do that. But hey, go for your businesses because you're going to need extra passive income from somewhere. And if I can get somebody to rent something from me, that's a passive income model that brings money in. That's what you want, ladies and gentlemen. You don't want to work for your money anymore because the prices are going. I can't even believe I liked that C8 Corvette when it first came out. What was it? 3 years ago? Was it? And it was the first one I showed some videos where I went to go check out Chevy. I don't even deal with Chevy generally unless it's a truck, but I went down, checked it out. It was looking beautiful. The cars were selling at, if I'm not mistaken, around 55,000, 60 grand, whatever. They come up with another model like a C06. And last night I'm on the internet. I see something pop up. It said 6 figures for this Chevy C06. And I'm like, are you serious right now? People are paying for a Corvette for this model, overpaying 150, 160, 180 grand more than manufacturer suggested price because it came out. And it's almost like you can resell it at a higher price or something. I don't even know what they're doing. I'm just like, this is getting outrageously ridiculous. If this is what's going on out here, it's going to be very, very bad for a lot of people. So again, Brian P. Hey, Eric, tell me to get some Yield Max for more money. That's right. Get some more Yield Max ETFs. The rise is happening. Did you see NVIDIA's back up to 118? You had every opportunity to get it 90. You had every opportunity to get it 95, 97, 98, 95, 100. And you still didn't get in. 18%, 19, 20%. Gino Chimiente would have been buying at the 90. He would have already exited. He would have said, thank you very much for that 20 to 30% return in less than 3 weeks. I'm out. All I'm saying, I like using Gino Chimiente's model because it just shows you how some investors think. Other investors are going, I'm just going to wait. I want to break the bank. He's like, just give me my 25 to 30% in a short time frame. Because when you think about it, if you do 25 to 30% this month and you do 25 to 30% next month, when you start calculating over the course of the year, it's not just 25 or 30%. It starts being like 200%. Or you can wait around and hope that NVIDIA goes up to 180, 190, 200 to get your 200%. And are you going to sell then? I'm just saying, what's your objective? But it's not bad to think that NVIDIA could go to $200 a share. That's not impossible. All right. So, but Yield Max ETFs gives us dividends at 20%, 25, 30, 35, 40, 50, 60%. High risk, high rewards, ladies and gentlemen. But go to Yield Max ETFs. You can buy those stocks at Robinhood and Webull. The link is down below in the description box. It's that simple. All right. You don't have to work too hard for this. Oh, by the way, speaking of that, I have to do something because I just realized I don't have this on the SSN Nation podcast for the playlist. I just realized this. So let me get this on screen here. I'm glad. Geez, I don't have it on anything. That's not cool. Let's get it up. Hold on. I don't even know if I can still put it in the playlist. Hopefully so. Ay. Stock markets. Yeah, we messed up here. We messed up big time. Okay, let's see if I can add it, but that's got to be added. Geesh. All right, there we go. All right, let me get back up here. Money. I know what you meant, man. M means money to me. It either means millions or money. That's what M means. If somebody puts 17M, that's 17 million. When you put MM, that means money to me. So that's what I figured you were meaning. Money making in here. We are making money in here. Exactly. I know exactly what you meant. Another problem is getting a mortgage loan. Don't forget, most banks require 45% debt to income. I know, Victor Marrero, and I'm glad you brought this up, because a lot of people do not understand that you don't even, just because the bank's going to give you a loan, don't do it. Your 45% debt to income ratio, you're going to be effed up. You're going to default. I'm just going to say it like it is. They don't care about you. And what I'm trying to say is they'll take your house back. It's more valuable to them later. You gave them 20%. You gave them 10%. You gave them money. You paid a few months, but you bought the house. All they have is a piece of paper. They didn't do anything. But yet, if you default, they walk in and be like, hey, man, we'll give you $5,000, $7,000, $10,000 to move. Go on. So then they can put the house up for sale for what it's going to be worth later, a higher price, and collect. Do not go 45% debt to income. Do not go 40% debt to income. Don't even go 35. Yes, they'll allow you to do it, but you should be basing yours on 30%, around 30. I've never talked about this actually, but you should be staying 30% or lower. That's it. 45% just means you're in trouble. I'm going to ask every one of you watching right now who actually works for a living, if somebody came to you and said 45, 50, we'll round up to 50 because that's what once you include insurance, once you include property taxes, once you include HOA, you'll be at 50. If somebody came to you and said, hey, man, can you survive with 50% coming out of your paycheck? And then the question goes, does that mean it includes where I live? And you say yes. From that point on, 50% from your gross, can you survive? And some people may say yes, some may say no, but I will warn you, I said gross. Can you survive on 50% of your net after tax and still put something away for a rainy day or pay for somebody's college or get yourself a new vehicle or whatever else? Because the answer is going to be no. I'm going to tell you straight up. I actually know what the numbers, somewhat of the numbers is. I just can't remember. I'll make a video about it. That depending on your debt to income ratio that the mortgage companies let you get away with, there's an actual default rate. Soon as it goes over 36%, I believe is the number, that's when defaults start happening more. So when somebody gets to 40, 39, 38, 43, 45, you're going to default more than somebody who's under that 36%. I don't know if it's changed, but that's what it used to be. So, and before, banks wouldn't let you go 40, over 30. It was around 36 to 38. Then they started doing 39. Now, Victor Marrero, I didn't know they went up to 45% because they know the default rate. The numbers, the statistics speak for itself. This is why I say you have to be the CEO of your life, ladies and gentlemen. You can't go by the status quo. You can't go, oh, I want that house I got. And they go, oh, you can afford it. You make $150,000 a year. You can afford it. You can buy this $600,000 house. See, we're going to give you 45% debt to income ratio. No worries. And then after you buy it, you find out, wait a minute, I have to pay an extra 10%. I got to pay 55% of my income, and 20% of my income is going to taxes, or 25%. Now what? I got groceries to buy. I got insurance to pay. Car I'm referring to, or health. I got things to do. So this is why the inflation numbers are what they are. But you have to understand you're contributing to this because you're out here using credit cards. You're out here getting loans. The Federal Reserve is going to give you a lifeline right now. In 30 days, actually, they're giving you a lifeline right now because you already know what's coming. So therefore, stock market is going to keep tilting upward ever so slightly, or there may be a big boom. But the point of the matter is it's going to tick up. You need to ride the wave. You need your NVIDIA. You need your Apple. You need your Meta. You need these guys. You need to buy into these. You need dividend funds. Okay. Inflationary wise, let's get into this. I got more to talk about. But inflationary rise, the real estate investment trust, they're going to go out here. In case you don't know what real estate investment trust, they're REIT REITs. They go out and buy apartment buildings and generally, and they basically give up to about 90% of the profit goes to the shareholders in a real estate investment trust. So they have properties they bought that have loans. Those loans could have rates such as 4.5, 5.5%. So what happens when the Federal Reserve reduces the rates? These guys refi. So when they refi, that lowers their rate, which now means there's more profit, which now means you still get paid your dividends. So if your dividends are 14% ARR, these are stock symbols. Get your pen, pad, and paper ready. ARR, NLY, AGNC, ORC, PSEC is not such a real estate investment trust, but they're Prospect Capital. You will see these guys are at 13 to 15, 16%. That's dividends that you're receiving. So if they have survived all this time, and they can give you that rate, what's going to happen when those rates reduce and they make more money? That means you're going to be locked in at that return on your price because you're going to reinvest your stocks, right? Are you buying stocks out here, ladies and gentlemen? You have to be. You have to be. All right. Brian P says, I got the notification and all the videos. Thank you so much for that. And don't forget, everybody out there, please tap on that like button. That would be greatly appreciated so the YouTube gods know that you're in here. And if you like what we're talking about, please subscribe to the channel and come back on Friday night at 9-10 p.m. Eastern Standard Time when we have chat room open to everybody. What about tiny homes? What about, there's no problem with tiny homes. But again, you're going to put yourself, when we start doing short-term rentals, short-term rental game is changing. Let's just put it out there. It's going to change. First of all, you have a 70% paycheck to paycheck scenario. It's risen up to 78% during the month, meaning when people have multiple checks, one of their paychecks that comes pays the beginning of the month, the mortgage, let's say, or the rent or whatever. That is paycheck to paycheck for the month, but their next check gives them a little more clearance. 78% of United States citizens are living paycheck to paycheck during the month. That's, just call it 80%, right? That means upper middle class is about to be wiped out next. They're next. They're coming for you. All right. So you have to make these things. So yeah, when you say tiny homes, I don't know exactly what you mean. Investing in tiny homes. That's probably a good investment, but how much are tiny homes going to cost after everybody starts wanting to buy them? Remember when you could get one, like it used to be like 40, 50 grand. Now I'm seeing where people are paying over 100 grand. I'm just like, this is getting crazy now. It's all going to happen based on supply and demand. It's pretty easy. The RV rental will be permanent rental. The RVs won't move. Yes, my friend has land with a huge septic tank. Good. We can include water and rent each spot for $900 or more, depending on the RV size. Great. Hey, that is a situation that some people like. It costs less. But again, I remember back in the days, a few short years ago, you could rent a pad in an RV park in the hundreds, 200, 300. Have everything he's saying here. This is no surprise that they would be up to $900 now, because the cost of living in an apartment is double that. So it makes sense. So now they get to raise their prices up. So it would make sense. That would be a profitable business. But do we know what the occupancy will be? Or does the occupancy even matter in this situation? Some of you would say, yes, Eric, it does. I contend when you do something like this, it does not. Because now I can go down discountlots.com. You heard me? Get your pen, pads, and paper ready. Discountlots.com. No credit check, no qualifying, no barriers to entry. You can buy property, acres, lots, all over the United States. And you can turn it into, if you got land and it's in a certain location and you have a vision, you can do something like this and have payments of $100, $200 per month for 10 acres, 5 acres. 2 acres actually too, but still. And then you can actually do exactly what Victor Marrero's friend is discussing with him. The question is your model going to meet the 365-day test? How many people are going to rent there? But here's what I contend with something like this. The land cost is minimal. And if you have a septic system, you have water, and you have what do you need? Water. You got to put the pads down. Well, maybe not, but generally you're going to have a pad. But cement pad is what I'm referring to. And then you got to have water. You're going to have sewer using the septic and the electricity. You got to have that there. So you got to bring it in and wire it up generally. So those are going to be the costs. But once you bring that in and wire it up, anybody that stays there and gives you $900 a month, that is passive income coming in. You have the infrastructure built. So now it's just maintaining that infrastructure and collecting money. And so you're getting, if 10 people are there, that's 9 G's a month. I don't think it's going to cost 9 G's a month to maintain a place that has a septic tank, electricity already wired up, and water already wired up, and your pad is sitting there. I don't see how that's going to cost you $9,000 a month under any circumstance. So now it's just a matter of, after he gets 10, what happens when he gets 20? It's not going to cost $18,000 to maintain. Now you can start looking at hiring other people maybe, or another person, unless, you live there, I guess, because you can always live there and make your own little house out back. Doesn't have to be an RV. Your business center could be like old time 1800s, where the shopkeeper lived in the back or above, right? I'm just saying. But anyhow, or management quarters, whatever. But either way, I like the idea, especially in this environment. If you can provide a place that can sleep 3, 4, 5 people, and it can only cost $1,000 or less, you have a market for that. So if a person has an RV that has 2 bedrooms, can sleep 4, maybe even a bunk beds or that configuration, and people can live there, they will spend $1,000 a month. Because if they try to get a 2-bedroom apartment, they know $2,500, $2,000 per month. So think about it. That's a great model in this environment, just like Brian P. was saying, tiny homes as well. Great model. There's a place in where's that place at? Oh man. Well, anyhow, it's by Savannah. And a guy in one of the cities, it's where I was going to check out it's where I went to the hotels at, and I can't remember the name of the place. But anyhow, been going to too many places. But anyhow, the guy said he has acres, and I can't remember how much, but it's something like 40 acres. He wanted to turn it into a tiny home community. And the city wouldn't let him because it was off the freeway. So they said, we can't zone it for that. So he's like upset, and now he's looking for another spot. But yes, that works too. Because again, if rent is $2,000 to $3,000 per month on average, and you can provide something that's $1,000 and make that model work for you, that's a premium. People will come sign up, right? It's very simple. There's a niche out here, but it's hard to do on a mass scale, because cities don't generally want you to have a whole 1 mile by 1 mile block of that RV park or tiny homes, even though it can help people live there. They don't really want to see that. They'd rather have homes. But nonetheless, there is a model for it. Yep, there's a model. Brian P. Hare, check out your email. Oh, here we go. Agree. 30% will be my sweet spot for debt to income. Anything above that, banks will start discussing other types of loans that can jam you up. Exactly. Having a comfortable buffer will allow you to sleep. Exactly right, Victor Marrero. He's got it. He's saying 30%. I agree with him 110. I wouldn't even take the 36. And this is when it was 36. When I was out buying up my homes, it was around 30, 33 to 36. They'd be like, oh, we'll give you this for that and this for. I said, no. No. Give me under 30. That's what I want. I want the loans that matter. Like I say, I always get loans that have no penalties for prepay, because they still have some loan companies try to throw that in there. If you pay this off early, we get some points. So I make sure no points on that. No points on if I want to refi. And when I refi, I always get the banks to not charge me for the refi of their loan. No points. So you make the rules. Don't go by what these guys say. And don't go up to 40. Don't even go past 35% just to keep it in real perspective. And I would keep it at 30. Don't mess around. Just go to 30 because insurance and property taxes are going to go up. That's not going to go down. So now you're going to, I'm telling you right now, just listen to what Victor Morell's saying and I'm saying. You will save yourself a lot of heartache. Because again, Victor Morell just had the situation happen to him where his insurance company said 150% more is what we want. That is insane. And if your insurance is already $2,000, imagine going from $2,000 to $5,000. That's insane. $175 to $400 per month. That's significant. And then imagine your property taxes said, you know what, we went up. Your house is worth $400,000. We went up an additional 0.5%. So now that's $2,000, $3,000 more. Again, you're putting yourself in dire straits. This is why the inflation number low is good. The Fed's cutting the rates is assured. You have to be buying stocks, real estate, or investment property or investment business. Businesses that give you passive income. That's the only thing you can buy. Forget the Louis. All right? Louis Vuitton. Forget the bags. Forget the clothes. Forget the partying. All that is liabilities. You don't need to look special. Everybody's special in their own right. What you need to be is special in the hidden spot. Your brokerage account that's hidden, that's what needs to be special. Your home, it doesn't have to be the biggest on the block. It doesn't have to be the biggest, baddest spot. You need a roof over your head. Nothing wrong with a roof over your head. You don't need to show anybody anything. You don't need to go over here and overpay for a bigger house. Just get something that you can afford that you know in your brain, okay, I can afford this mortgage payment of $1,500 a month. I can also afford a $2,500 a month. I can afford a $3,500 a month payment. But here's the kicker. You will be the guinea pig because you don't know what's going to happen. If you're in an HOA, just because they say it's $200 a month in 2024, what's it going to be in 2027? Is it going to be $450? Your insurance in 2027, is it going to be $3,000 a year, or is your property insurance going to be $7,000 a year? Or you're not going to be covered at all. And then that's a whole nother issue. Or is your property taxes going to be $3,000 a year? Or because everybody's house went up in value, now your value goes up. So now you're going to pay double that in property tax. You tell me, you want to risk that? You're going to lose your house. All the down payment gone. All the monthly payments for the last 3 to 5 to 6 to 8 years gone. Don't play around, ladies and gentlemen, because this is the wipeout phase. Here comes the wipeout. You're either going to have to make choices, insure the house or not, insure the cars or not, buy a new car or not. You're going to have choices that are going to be life-changing choices that you're not going to be able to cast a check on because you're not going to get a raise of 100% or even 50% or 10%. So therefore, you're going to be stuck like Chuck. 70% are living paycheck to paycheck now. What do you think is going to happen in 3 years? All right. So I'm telling you, 3 years, I'm retiring from YouTube. All right. 3 years. That's all that you guys got me. And so I'll be here for it when I said I told you so in 2024. I'll be here. You guys can come mock me if I'm wrong. That's the other half of it. So don't go anywhere. Just come back and mock me if I'm wrong. I don't think I'm going to be. I know I'm not going to be wrong. What am I saying? I don't think. I know I'm not going to be wrong. Brian P. And we want to sleep at night. ULTY. 0.78 this month. That is a stock, ladies and gentlemen. That's 78 cents per share on about a $10 stock. Is that what it is? I think it's $10, $12, something like that. Understand, what if you get $8 a month on a $12 stock? Do you guys understand what type of return that is? You go 8 divided by 12. That's over 50%. All right. 8 goes into 12. How many times? That's basically 8 is what you earned. This is how you get your ROI. $8 is what I earned, and I bought it for $12. That's how you do it. 8 divided by 12. What is that? That's a lot. All right. In fact, let me go see what it is. I don't know what ULTY is. Maybe Brian P will tell me, but I'm just guessing. $8 is what we made divided by 12. That is 666, 66%. If they give out 78 cents every month, that's your stock. ULTY. That's why you need to download Robinhood and Webull, get your free shares of stock, then go buy yourself some ULTY, or go to UMaxi, or FEPI. I forgot. FEPI, IWMY. Had to throw those in there. JEPI, JEPQ, because that's JP Morgan ETF funds that give you 9% to 10.5%, depending on what their stock is right now. That's not bad for JP Morgan stock. Most people want to be safe. That's safe stock right there, in my opinion. Okay, so you want to earn 66% or roughly thereabouts, or 60 or 50 or 40, high risk, high rewards. You buy dividend stocks, let it reinvest itself. You're making that money's making money for you while you're sleeping, while you're breathing comfortably. Okay, paying on 18. Are you saying it's $18 now? Okay, so let's go. That's different. Let me go look and see. If it's 18, let's see what the return is on about. We'll still say $8, even though it's more than $8 if it was 78 cents per month. That would be almost $9 and something. That'd be 50% return. Divided by 18. Let's go look at this. Oh, is that still 6? No, I did something wrong. 8 divided by 18. 44.4. 44% good enough for you? I think so. Everybody will take 44, 45% as well. Either way, you're winning. Whether it's 12, whether it's 18, you would be winning. Absolutely, says Victor Marrero. I love those tiny homes, but they're expensive. Exactly what I was saying. I was thinking used RVs that you can get for less than 10K. Then you can fix them up, make them nice, and rent them long term. Exactly, Victor Marrero. I like that model right there. Right there is a sweet spot, because the tiny homes are no longer 25, 35 grand or 50 grand. The point that Victor Marrero is making is the point that I was saying earlier. If you can get a situation for the common man that is hurting right now, and you come to them with a sensible solution, we have the RV, we fixed it up, we made specially for living in, custom, but it's just going to sit here. And yeah, it can drive too, but it can sit anywhere. Now all of a sudden you've created a business that everyone wants. They'll say, wait a minute, how many can sleep here? Oh, I have the one that pushes out, so that's 1 bedroom. We got one that sits in the back, so that's 2 bedrooms. Oh, good. So it can sleep at least 3 people comfortably, a family and another one kid or something. Hell yeah, we'll pay $1,900 per month. Hell yeah. Where do we sign up? We got a kitchen, we got a bathroom, we got a toilet, and you have a toilet and a shower, usually on premises in an RV park as well. Where do we sign up? $900 a month? I'm in. Because otherwise, this same configuration, we need a 2 bedroom. It costs us $2,000, $2,500 per month. And most people, Social Security would cover that, right? So again, that puts people who are at risk at a lower risk. It's a beautiful thing. I like this model, Victor Marrero. I love the model, actually. And there's a dirty little secret out there that people don't realize. If you want to buy an RV, you go to the southern state, go to Texas. You'll be able to buy RVs that are only a few years old for damn near below half of the price. It's outrageous, because a lot of people buy RVs in the state of Texas or in the southern states. I don't know what it is. All I know is the guys almost made me buy an RV out over in Comanche, Texas, of all places, because I was visiting a friend, my boy, Chop. And he goes, yeah, we drove up the street to this other city. And next thing I know, I said, yeah, you know, the wife keeps talking about she wants to get this RV driving around. I'm like, okay, let's go see. But where we live, these things are $100, $120, $150,000. I don't want one of them. Takes me over to a lot. The damn RVs were 3 or 4 years old, and they were like 30, 40 grand. The same ones that cost in Cali like 100 and something. Pullouts. In fact, storage underneath with the barbecue grills, all kind of crazy stuff. And I'm sitting there like, wait, these are like brand new. People are defaulting and they're not worth anything. That's the point, until you make them worth something. And so this right here, I love this idea right here that he's doing, because now you can actually sell it to the person or rent it to somebody. Either way, you have revenues coming back. Sell it to you, live here, or rent it from us. And then you got to, do whatever you got to do with that. But I'm just saying, I like that model, Victor Marrero. I like that, especially when you can turn vacant land into that. That's what I like about it. So therefore, it doesn't exclude anybody. Land, what is it? Discountlots.com, ladies and gentlemen. Discountlots.com. No credit check, no qualifying. Brian P says, hey, Victor, buy some tiny home from Amazon for $30,000. I saw it. Yeah, I'm not doing that. Or 15. I know. I saw that. Check it out. Yeah, I think those are to go in your driveway or behind your house. Really, I need to check that. Yeah, they're there, Victor Marrero, but I don't know if it's going to be that type for what you're looking for. We already have a few people interested in renting from us. I know you will. The land location is close to the shopping and store. Oh, man, that's a good deal. This is a business here in Florida, especially when you pay over $1,300 or more for a one bedroom. Exactly. That's what I was saying, Victor Marrero. There's places in Florida that people are paying, as you know, well more than $1,300 per month. I mean, in all the hot spots like southern South Florida, rooms are costing $1,300 in a house. I mean, come on. But if it's in the Orlando area, then that's a little bit less. But still, if somebody has $900 a month and a family of 3 or 4 can stay there comfortably, and there's a few amenities nearby, then that's the best case scenario. Now it just matters on how much the land costs. ULTY closed the day at 11:50. Oh, I was right. So it was around 12. There we go. I do have some ULTY too. I just never pay attention because I reinvest the dividends. It just keeps going. It just keeps repaying itself. So now I'm buying more stocks, which next month I receive more shares. It's that simple. There we go, ladies and gentlemen. If you buy at 11.55, it's even better than 66% return. That is incredible. Oh, look at this. Brian P. He's over here doing the damn thing. He's doing the SSN Nation. In fact, I like that. Doing the SSN Nation, buying stocks, buying real estate, buying assets that pay you. I love it. 2007. Oh, my God. Here we go, ladies and gentlemen. I'm going to put the calculator up here. 2007 shares times. He's back. He's known as Mr. Dividend here, ladies and gentlemen. Brian P. That's $1,565. Ladies and gentlemen, that's not a bad passive income situation, is it? That's if he just he didn't reinvest the stock. So now $1,500, if I do this right, if he reinvested, that $1,500 buys 1,500 divided by 11.55. That buys another 130 shares, 129 shares, 0.87. And then if you times that by 0.78, next month, it will generate another $101. So now it would be $1,600 worth of stock it's going to rebuy. Or if he didn't buy the shares, he could just be collecting a $1,500 a month check. Pay taxes on it though, but I'm just saying, still going to be collecting money that he didn't have to work for. So what if it's $1,200 effectively every month? Who cares? That's $1,200. And keep in mind, the $20,000 is still liquid in his account. In case he wanted to sell all the shares, he would have roughly almost $20,000, right? So I'm just saying, that's what you should be looking at. The SSN Nation way, ladies and gentlemen. E. White is in the house. Another investor is here in the real estate game. In the stock game, I'm hoping. I don't know if he does the stock game, but all I know is he's in the game. Is he out here buying stocks? Yes. Is he out here buying real estate? Yes. Is he out here buying whatever else to make sure he gets passive income coming in? Because he doesn't want to work at his job another 10 to 15 years, I'm sure. So he's laid the foundation. Welcome to the SSN Nation Wealthy Wednesday night live stream. E. White, I humbly appreciate it with that icon. And he says, good evening, family. Received the notification and I smashed that like button. Oh, yes. Thank you so much for that, E. White. And he says, no paying on August 18th. Okay. Then we have money coming in 4 days. Brian P., you have 2007 ULTY shares. That's right. Damn. That's right. That's why Mr. Dividend is back. He's back with a funky, fresh attitude after he said, I'm out. That's over $1,500 per month. Congrats. Just set it and forget it. It will continue to come. Exactly. On that grade of return, 60% or higher, high risk, high rewards. That's all I'm going to say. Go check out YieldMax ETFs, high risk, high reward. Defiance ETFs, high risk, high reward. All right, just keep that in mind. But yes, congratulations. And he has another 1,000 or 2 in some other YieldMax ETF stocks. So the man is doing some crazy number like 4 G's a month or 5 G's a month on dividends. It's insane. Eric, I'm currently looking at the pros and cons of owning a condo hotel. For myself, I do not like some of the terms. I think you went over a few in previous videos. Yes, E. White, I can't get with them. I can't mess with them, period. I've challenged everybody in the videos. I've challenged even guys that sell the condo hotels in Vegas. I said, come on and talk about it. They don't really want to talk about it because once they actually start telling people real numbers, which they never want to tell the real number, again, it is not one of my things because it doesn't make sense to me. If I want 5% return, if I want 3% return, if I want 6, I mean, why am I going to buy a real estate? That makes 0 sense. You can buy a dividend stock that gives you 30%, 20%, 15%, 10%, and call it a day, and I'm still liquid. I don't have to worry about if there's a pandemic where nobody's coming to rent for 6 months or any other disruptions where people aren't renting. My occupancy rate is low. It's not doing what it should be doing. Every year I have to worry about that. Every month I have to worry about that when you have real estate rentals under a condo hotel situation or real estate rentals, period. But the fact is, on a condo hotel, I don't get to adjust. You can't call up and say, hey man, I see you guys charging $430 per night. Can you make it like $330 now? You don't get that. You don't get that option under a condo hotel. I want a higher occupancy rate. Can you lower it to $330 now? I only bought this thing for $250,000. I don't mind taking 10 to 15% return. Just lower the price. You don't have that option. You also don't have the option of how much your HOA fees are going to be, and you don't have the option of how much they're going to charge you on management fees. Any of those can change, unless there's always a caveat, I guess. Unless the management company does not run the homeowners association. So, and if the homeowners association is able to have a contract with the management company, but it's generally the developer is going to have the contract with the management company. So you generally don't get to that level where you're going to be able to dictate terms. The terms are already met out by the developers team. And they don't care because you paid for their condo to be built. They didn't take any risk. So why are they going to care about you later, right? Think about it. My condo costs $200 in this building, but anything I want to do, I have to get approval from the management. That does not mean I own it. If I want to stay there, they have rules for condo hotels that usually say you can only live there a certain amount of time. Again, it's hard to generalize because until the condo hotel gives you a contract, which they are reluctant to do when you first originally buy, especially on pre-constructions, you're not going to know what you're in for. That's another reason why I can't sign up for pre-construction condo hotels. And I don't like condo hotels myself. Maybe somebody can make an argument why a condo hotel would be good to give you, and you're happy with the 5, 6, 7, or 3%, or breaking even or paying. I don't get that aspect at all. Why am I going to buy an asset, or what I think is an asset, and then pay for it monthly? That doesn't make sense. That's not how assets work. That's a liability. So, yeah, I just can't. I do have videos out, ladies and gentlemen. If you're interested in condo hotels, I actually made some new, new videos about it, because generally what's happened is in Dominican Republic, where we have been making investments over the last 3, 4, 5 years, some of these projects that were allegedly condo projects, after people have paid their 36 months or 24 months or in between that, and now it's ready for delivery, and the delivery date is now a year or two later, now they're telling people that these are now condo hotels. They weren't sold as condo hotels. Now they're telling them, oh, we have this management company. That's wrong in my book. Unless, I haven't heard from any of these companies yet, but unless they say we'll give you your money back because you thought you were going to own it, then I'd be fine. But something tells me they're not going to give the money back, right? They're not going to go, oh yeah, okay, well, we changed it to a condo hotel, so here's your money back, and then go out there and sell it as a condo hotel, because that sell, it's going to take them a longer time to get. I'm going to tell you that right now, because most people do their research, and all you have to do is Google on YouTube condo hotels, and you'll see all over the world, all over the place, and nobody ever wants to say, well, I made like 20% this year. The only way you're going to be able to do something of that nature is you have to would have had to buy a condo hotel like 10 years ago, when you bought in for like 150, 170,000, and now they're renting it, which is the case in Vegas. They're renting it for $330, $430 per night. Obviously, you're going to be happy. The new person buying that same condo for $500,000, he's not going to be too happy. Or $400,000, they're not going to be too happy. They're going to look at 6%. But people who bought 10 years ago, when it was half the price, of course, they're going to be happy, until they realize, well, wait a minute, that furniture package thing is coming up. I got to outlay about 40 G's. Yeah, every 5 to 7 years, if you have high occupancy, you're going to be replacing furniture. And you pay for it as the condo owner. You don't get to go out and see your buddies or your manufacturers and say, hey, man, I want furniture. Oh, yeah, sure, we'll give you furniture. What do you need? We'll give you the wholesale price for you. 20 G's. No, you don't get to do that. No, you have to go with the furniture package that everybody's going to get. And generally, it has to be of great quality, so it can last 5 years from high occupancy rates. That's how it works. So you are the customer in condo hotels, is the way I look at it. I don't have any, and some of them might have rules. Again, they have to approve who I sell to. That could be a rule. I mean, there could be all kind of rules. You just don't know what they are. I can only stay there 30 days max, or in the case, I'll use Vegas, because Vegas is easy to find out about. Vegas is outrageous because they have some of these condo hotels they have. Let's just say your HOAs are $400. Well, they're not. In Vegas, they're $1,200 a month, let's say, because that's what they are. In most cases, $1,200 a month for your HOA. And then if you stay there, they charge you per night for your own unit. Not free to stay there. That's not all of them. That's only like 1 or 2. But I'm just letting you know that's what's in play potentially. So you need to look at your contract and make sure that's not a thing. There's all kind of things with condo hotels, and the return rate and the apartment appreciation or condo appreciation isn't the same as a standalone condo. And you want to know why? Because a condo hotel is valued at a different, it's basically a commercial property. And so now you have to worry about who's going to finance it as well, depending on what country you're in. Some places won't finance these condo hotels because they realize that's not a primary residence. You can't stay there all year. In a lot of cases, not all, some cases they'll allow you to live there. But in a lot of the cases, you are the customer. So they don't want you to stay there. They want to be able to rent so they can get 50% of your rental. 45 to 55% of your rental. Hear what I'm saying. 45 to 55% of your rental. I'm just telling you, this is what's happening out here. And people are just signing like, no worries. I'm like, you better worry, because here's the situation. I'll give you a perfect example right now. Signature MGM in Las Vegas. All right. That's a condo hotel. They charge, what is it? For about $450 per night. Their condos, you can buy the 1 bedroom, 2 baths, 1 bedroom, 1 bath. You can buy for around $500,000. Okay. They rent for 400 and something per night. These things, that person, well, if he buys it, the person that buys it at that price would be getting 6%. What does that tell you? $30,000 per year is basically what they get. That's it. And that's based on roughly a 50%, $1,200 HOA. That is crazy. That is so crazy. $30,000 times how much gets you to, basically, you can already figure it out. 6 goes into 12 years. 12 years. And in those 12 years, your HOA fees are going to go up. In 12 years, you're going to pass 2 cycles for replacing and paying for the furniture package, which I'm assuming the signatures actually come up. I don't know how much it costs yet, though. It'll probably be like, I'm guessing 40 G's. Somewhere between 35 and 40 G's is what I'm guessing. And it could be worse if they start doing, we're going to replace countertops and things like that. It's out of control. All right. So all I'm saying now, here's the other part. Because the management company knows how much you are making, how much you are charging, because it's them, Signature goes, how about a 9% increase in the HOAs? 9%. Seriously? That is crazy. That is real crazy. They know how much you make because they're cutting you the check in the condo hotel. So it's easy for them to dictate how much they're going to make. Yeah, okay, we'll just add another 5%, man. We'll call it HOA fees. So just letting you guys know, this is why when E. White brings this stuff up, I hate these things. I hate them with a passion. I would not, in other words, it's not that I hate them. Now, let's put it another way. If I stay at Signature MGM and I'm renting from the MGM casino, I love the Signature MGM. There's no problem. As long as I'm renting, not owning, I'm good. But what I mean by it is, if you're investing in one, I would pause. I would really, really get all the information before you make that move. Because once you're in under their rule. And whatever all their rules are, you better know all of them. So and you better agree with all of them, because if you don't, and there's a situation that could arise later and you can't get out, you can't sell in a timely fashion if an emergency arises, again, I don't want anybody to be in those situations. I see abandoned RVs all over the place. That's right. Some people are tired of paying storage and insurance and will sell them cheap just to get rid of them. That's exactly it, Victor Marrero. That's exactly it. That's what the guy was telling me, why he had these 3-year-old RVs for 30 to 40% of the price. They literally look brand new. because that was people would start driving out. Then they would find out, oh damn, this thing only gets 12 miles per gallon. They'd be like, holy smokes, what's happening? And then they would find out things are more costly than they thought because they were driving them around, not parking them. They're driving them, going into an RV parks, then driving them. Man, crazy. You're right. That's why it's a good business model if you can get those cheap, because I'm pretty sure in Florida, just like in Texas, there's probably a whole bunch that are cheap sitting around because they find out. And the insurance, again, comes back to haunt them. Insurance that used to be $100 a month, now they want $500 a month, depending on your jurisdiction, especially if it's in Florida. Florida is the home of people crash into your car and drive off. I actually ran into the back of somebody at a light. So they pulled up. The light goes. I'm right behind them. They're first. The light turns green. They go. I go. They hit their brakes in the middle of the intersection. I bumped into the back of them. So I'm like, oh. So I'm getting ready to move over a lane, thinking that they're going to move over a lane, and we got to exchange, insurance documentation. You know what these people did? They kept going. So I follow them. I hit the horn, flash the lights, and I'm waving like, move over. We hit the next light. I'm just sitting there like, I'm getting ready to get out my car trying to get them. And then I'm like, turns green. They take off. I pull up next to them, and I'm like, hey. They look at me and just keep driving like I didn't hit them. They acted like I didn't hit them. I did hit them, but they acted like I didn't, and they just kept driving off. I followed them for like a mile and a half. But after a mile and a half, I was like, F it then. I ain't going to keep trying to do this. If they don't care, I'm not going to care. So, I mean, and in Florida, I've had 5 times people came, hit the truck, tapped it, drove off, and the driver's on my passenger side, so he knows he ran into the car, ran into the truck, tapped, drove off, didn't stop, would never stop. I'm following them down, thinking they're going to pull over. They just drive. It happened 4 or 5 times. It started to be like a normal situation. I can only imagine how much insurance has increased in Florida. This is like 3-4 years ago, but I can only imagine how much it increased. Because the way things are, it's crazy. Just like in Atlanta, Georgia, it's crazy. People just smash up cars, no big deal. You can imagine your insurance rates are going to go up, or you can't get insurance coverage. That's what's going to happen. So if people can't get insurance coverage, you have less people. That means you pay a higher rate. We just need the land to be zoned for that rental. Yes. It's got to be, it could be, what do you call that? I want to call it, it's not commercial, it's not residential. It's like they have tweener type of zoning. I can't remember the name. What do you call that? Damn. But either way, yeah, you're right. It does have to be in that zone. Property already zoned like that, but we're looking at the land next to his. Yeah, it has to be in that mixed use. Mixed use is what it needs to be. Or it has to be zoned for commercial hotel, something of that nature. It has to be zoned to be able to be like a property, multifamily, mixed use, something of that nature. But if it's next to his house, that's normally residential. They won't let that happen. E. White, every condo hotel has rules that can vary from one or another. It would be nice to get a hold of the bylaws to really understand the rules before signing. Yeah, that's why you can't sign. Or shall we say, you better not sign. If you don't have the rules in place, you better not sign. This is one of the things I got to give credit to Cruise on Land, because they actually have the rules in place, even though they don't call themselves a condo hotel, which half of it is. Because not all units are going to, let's say building 1 is an Airbnb only building, short-term rental building. Building 2 is people can still rent, but it's not in the rental pool. So unless you bought the furniture package. But anyhow, the point I'm trying to make is They put their rules in place for when you sell, when you buy, how much it's going to cost you, like for management fees. They already have that in place. So it is what it is. A lot of these places, though, that all of a sudden just showed up, like the Noval 6 properties, and now the 3 properties for Jesprin in DR, they just showed up after they've already been building these things for a couple of years. So people are thinking they're pre-construction. Now they find out they're in a condo hotel. So now they don't even know the rules. I've been trying to get the rules from the guy, Leeson, who first told me about it, because he owns it, one of the Noval properties. And I was like, did they send you the contract yet? I asked him again on WhatsApp, no response. So I'm assuming they haven't even told him yet. I'm like, this is insane. This is insane. I almost bought a condo hotel in Orlando about 10 years ago, but the management fees and usage restrictions as owner turned me off. Exactly. However, some have had good experience. It all depends on location. That's exactly right. Oh, by the way, you'll get a kick out of this. The Signature MGM, 70% occupancy rate for the condo hotel unit. Still 6% at 70% occupancy. Not 50, not 60, not 40, 70. That's pretty damn high in my opinion. Once you get to 70%, you should be busting with money. But not there. 6%. I was like, man, this is crazy. This is crazy what you're saying to me right now. So just keep this in mind. 70% occupancy rate, making 6%. Man, that's crazy. All right. Victor Morrell, yeah. We've all almost bought condo hotels until you actually read what's going on, and they're telling you we're going to charge you 40-45% management fee, and you're like, oh, what? Wait, what did you just say? And that doesn't even include your HOA. And you're just like, is this for real right now? That means I'm giving you 50% of my money minimum. And as soon as they raise the HOA, I'm giving them 55%. I mean, I don't get it. I'm not a big fan. Now, being that said as it may, they do sell these condo hotels, and there's a lot of people that have no problem. A lot of people say, I'll take the 5%, I'll take the 4%, I'll take the 6%. And then thinking, okay, well, I'll buy it at this price. A few years later, it'll be worth a higher value that I'll be able to sell for. And so I don't mind taking the 5 or 6%. Maybe I'll get the appreciation in 5 to 10 years. I mean, that's another option, but you would get the appreciation on any property in 5 to 10 years. And it'll be higher than a condo hotel. Because remember, anybody buying one of these things, you better find out, especially in the Dominican Republic, you better find out if the mortgage companies or banks will give you a loan that's on a property that's not going to be something you can live in. Because that, to me, is a commercial property. If you're not going to live in it, that's a commercial property. Whereas you could always say that's my second home, which they will give you home rental rates for. When you say I don't live there, that's a whole nother thing for loans. It's not the same thing. Not the same thing. All right. Thank you, Victor. Exactly. Oh, Brian P., Mr. Dividend with the $2 super sticker. Thank you so much. I humbly appreciate the donation. I rarely get those. So thank you so much, Mr. Dividend. I appreciate that. All right. Yeah. So we have a long talk. Now, I got to talk about something because we have some people right now that watches that's from Larimar. And I don't know how to say this other than say what I have to say. You guys already know. I've publicly said I want a refund. The only way I would not accept a refund is if they extend the contracts for everybody at least 18 months because they're not building as we speak. So therefore, you're not building a tower by 1 year. You're not building 2 towers by 2 years. You're not building 3 towers by 3 years. I'm just saying, those are 17 level high towers and everything else that has to be built, like the cliff itself, and it goes on and on. So now today, I didn't realize LarimarCity.com is their website. They give people information later. But at LarimarCity.com, in fact, I'm going to take you there. I'm going to go there, and I'm not supporting, just so you know, I'm not saying you should buy, because they do not have, they're not building there right now as we speak, with the first delivery was supposed to be September 2025. We'll even say, some would say December 2025. We'll just leave it at December 2025. Either way, they haven't started building, no foundation. They don't even have anything there, as far as I know. Even if they did, they're not building multiple towers that are 17 floors high in a year and a half, or a year and 4 months, or yeah, it's a year and 4 months. That's not going to happen. So I'm going to go to the screen, but I'm not endorsing Larimar City at this point. All right, let's just keep things straight. I'm just saying, I'm going over what we have found out, which I didn't know, because you guys, like I said, I haven't been, paying any attention to these guys. It's only because Joel Nolasco sends me some information and goes, "Hey man, do you know about this condo hotel at Larimar?" I'm like, "What are you talking about?" "Yeah, I know about Paradise Tower 2. He goes, "Oh no, Aston Towers at Larimar. What is going on here?" Now, I don't know how much they cost. They're not out yet, even though they say they're out there selling them. I tried to find out today from Gennaro. Gennaro says, I think he sent me back. Let me see if he ever got back with me. He sent me back something about, he sent me the July 23rd license agreement, because I said, "Hey, man," I was asking him about the permits. I said, "Hey, man, we can look up the permits, right?" So it's like, you can stop playing. We can look up the permits if we want to. There's no permits out there showing that you guys can build anything. And so he keeps saying something's coming, but that's what he's been saying to me for 2 years. So last year we were there in November, and he was saying it then he was saying it in May when we were there, June when I was there. So this wait stuff ain't my thing. But I was looking to see if there was something that he added. I think he added something, but I think it's on a voicemail. But I just want to show you guys. Let's see here. Where's the news at? Oh, this is the news. All right. So here we go. Let's wait. What happened? Where's the news at? Oh, okay. Here it is. Archipelago is making waves in the Dominican Republic using their Aston brand. This is crazy. So they're calling them the Aston Towers at Larimar City. Now, they have their article August 1st. Come to find out, they made an announcement June 14th. So again, they're shaking hands, showing a piece of paper, but they're not out on the cliff or out there building anything. So it's just another PR stunt as far as I'm concerned. All right. I don't know if this is going to happen or not, and I don't see anybody building anything. And so therefore, I'm just being a messenger that this is what's happening, but I don't know if it's legitimate or what the hell's going on, because slapping hands, showing a piece of paper, and then making an agreement is one thing. Building the actual damn structure is a whole nother thing. So Aston Towers, they're going to have apartments. They're going to have restaurants somewhere. It's going to be on the second man-made beach here, which is interesting. 3 towers, 432 units, personally named residences, and 3 elegant towers. So you can see it here. They're going to have their own beach. So here's some of the stuff. The complex will include multiple dining options, a spa, a gym, large outdoor pool. The residential proposal offers views of Central Lagoon located in phase 2. That's behind the beach, the Breeze Towers. That's on the man-made beach right here. So you can see the pool probably, come down to this man-made beach. There's a restaurant over here that's already included. Paradise Towers is on the other side, Paradise Tower 2. This is also a condo hotel, which I already knew about. Paradise Tower 1 is residential. Makes sense. There's 4 places that make sense to have a condo hotel. And I should probably add a 5th. But Cruise on Land, Larimar, Atlantida, and Oasis Lake. If you don't know, Atlantida's and Bavaro, kind of like Los Corrales, I guess, is what would be called. Oasis Lake is at Caribbean Lake Park that already exists. The Caribbean Lake Park, that is. Oasis Lake condos, they're going to be building in about 2.5, 3 years. That's special. That one makes sense. All those I mentioned make sense. The 5th one kind of is like Secret Garden. It's in Los Corrales. It's in El Cordecito side, actually. El Cordecito is where Secret Garden is. Because they have almost resort amenities there. So that kind of makes sense to make those. They are a condo hotel by Noval. Everything else, just a regular old condo with no amenities in sight anywhere, just a pool and a fitness room, or a pool and nothing else. That I don't know about. That's crazy to me. Okay, so here's the second one. They're going to call it Harper's. Harper's is a hotel chain that's around the world, internationally. Like you can go to Bali's or Indonesia and hang out, and you'll run into a Harper. So they're making Harper Paradise Towers is 144 branded residences. All right, so that's the 3rd Harper project in the Americas, because like I said, they're usually in Asia. That brand, but this is the Paradise Tower 2. So apparently it's not going to be 3 and 4, just so you know. And yes, there's a pool at Paradise Towers in between of all 4 towers. Then the surprise that I didn't know about as well, they're doing what Connor Rock's doing. They're going to have an 18-hole golf course. So how do you make more money? You allow people to build a Grand Aston at Larimar City Golf Hotel and Residences. Again, this is crazy. Hotel and residences will be located next to the resort's golf course. Prominent theme throughout the development. So this means they're going to pull, and I'm not mad at them from a financial standpoint. Why not have buildings on your golf course, charge people a fee? Then that's what you use to pay for the freaking golf course upkeep and put money in your pocket. I'm just saying, that's a great business model. It's accepted in the Dominican Republic to put condos on golf courses. That's all over the place. So I was like, this is brilliant. This is brilliant right here. I'm not even mad at it because it's brilliant. I'm like, it's accepted. Why not? Add some more money in the coffers. And you add more residents. And now you get to charge more money. You assume on the golf course costs more money, right? So this is crazy. Indoor golf simulator facilities, illuminated practice areas. Interesting, right? Interesting. So this comes out. Let's see. These are just some of the main guys in the companies. All these guys have that name, Luis. Jose Luis, Gerard, Juan Andreas. It's either Jose Luis or Juan Andreas seems to be the names of a lot of people. So here's Archipelago, 45,000 rooms, 200 locations, Asia, Oceania, Middle East, Africa, and the Caribbean. They're coming to the Caribbean with a vengeance with their Aston projects. So that's what I'm trying to say here. All right, so I'm not saying buy it, Larimar, because nothing's happened. They're going to be late. If they, well, okay. At this point, they have the environmental license. So that means all they need now is money to build. And their towers are sold out. Tower 1, Tower 2. Yeah, Prime Towers. Well, sold out to me is like 90%. There's always a unit or two available, but 90% sold out. And we're going to be in a Victor Marrero situation or everybody's situation. If you're in the first phase, you don't know when it's going to be done. You don't know if it's going to be done 2 years from now, 3. Well, we do know it's not going to be done in 2 years. Let's just put it that way. 3 years from now, maybe. 2 years, doubtful. So you're going to have to wait 3 years, which would make it a 5-year situation for your first phase. All those that are in Prime Towers and Horizon 1. And then other stuff will be built around you. But you're talking 2 to 3 years for sure. That'd be 51 floors in 3 years, which is 36 months. So they have to build a floor a month complete. Can they do that? Can they build a floor a month not complete? In other words, can you build a floor a month or a floor every 2 weeks? You got 51 of them. So that's over 100 weeks. That's 2 years just to build the floors. And then how long do you do the interior of the building? The AC, the electrical, the water lines, the plumbing, and all that. That's no picnic. Then you have to do the exteriors first and all that. But still together, can you do all this in 3 years when you have 51 units? You have more than that, actually. I'm just saying there's more than that because there's 5 buildings. Prime Towers 1, 2, 3, and 4 plus Horizon 1. That's 5 buildings. 5 times 17 is 85. So you tell me how you're going to build 85 floors. It damn sure ain't going to be a year. It won't be 2 years. I don't doubt it's going to be 3. So 2027, 2028. That's where I'm thinking. I'm thinking that's where we're leading. And even then, are you going to be able to build 2 floors a month for 4 years? Somebody better have some sort of special building powers because you would have to complete 2 floors a month on average for 4 years. That's 48. That's 96 floors. And we have 5 buildings times 17. That's 85. So yeah, it would take 4 years. Sure, you might finish Tower 1, Tower 2 in 2.5 or 3 years. Tower 3, Tower 4 in another year. I mean, I could see something along that line, but I'm not thinking delivery 2025 or 2026 is going to happen. Just so everybody's clear. Just because they have all this nice little marketing and glitz, don't fall. I need to see a permit. That's what we need to see. We need to see permits pulled. I need to see survey team out there going, oh, hey, man, you know they're going to put that Aston Hotel and Residences on the golf course. Where's that golf course at again? I need surveyors out there. I want to see them. Hey, GPS, this is where Tower 1 goes. This is where Tower 2 goes. I want to see markers. This is the markers. Because 800 acres is a huge ass area. In order to have the permits and everything done, you better have this thing surveyed where everything's supposed to go. So you get your permit, you come out, you're building it, everything goes right here as you instructed on your blueprints, your paperwork. You just can't roll out there and go, hey, I think we'll just pick this area right here. Start this tower right here. Start that tower right there. That's not going to cut it. No city's going to approve no crap like that. So permits are going to be very interesting. I need a survey team. I need to see survey team videos out there doing their 800 acres because that's a long span, 9 holes of golf. It's going to be on a golf course. So where's the 9 holes of golf going to be? And then that means we have to know where the hotel and residences are going to be. Where's that man-made beach going to be? Now we know 3 towers are going to be around that man-made lake plus the Breeze Towers. Where's all that going to be at? Where in your plans is it going to be at? Show us. It's going to have to make sense. Somebody's got to be out there doing something before they can get these permits. Hell, it's going to take a long time, 800 and some acres. And with all these things they're doing, this is crazy. I'm just saying. So we need actually more than 18 months. But that was my stipulation in order for me not wanting my refund, to give everybody an opportunity to say they want out or extend to 18 months. Well, actually 18 months is not enough. 18 months on top of 2025 is not enough. That's a year and a half. If we go September, so that would take us out to like January of 2027. Okay, at least January of 2027, we'll see where we're at. We'll see how much more you got to do. But at least that's better than people paying all their payments like now or the next 6 or 7 months and then finding out, oh, it's 2.5 years later from now, maybe 3, instead of allowing people to pay during the course of that time, knowing full well you're not going to have this done in the next 2-3 years. I mean, that's how crazy this is to me. That would be great PR. Great PR. And everybody would be happy. Instead of all the bad publicity that people are saying, I don't think it's a good idea to buy there, or whatever people's objections are, because you already have 1,000 or so people or more who has purchased there, and they're not happy because they're all getting no answers. All right, we're going to wrap this up, ladies and gentlemen. Make sure you smash this button on the way out. And thank you so much for being here. And I didn't throw down any SSN Lifestyle videos tonight, but I'm going to do it right now in case we have some new people watching. You might have saw the one coming in. Let's go with, this is a long one, but this is going to give me a copyright strike, but it's all right, man. It's worth it. What the
Come on.
All right, ladies and gentlemen, had to end on the high note, the music of our man at the Smooth Jazz Festival, Brian Culbertson, Napa Valley, and some of that St. Martin visit, St. Martin love. That's right. Another love of mine is St. Martin. The prices have already escalated there, ladies and gentlemen. So, but they're starting to build on the island of St. Martin as well, but not at the lower prices that DR has. But nonetheless, just letting you guys know, there's places that you can actually get pre-construction or real estate that's going to, turn over pretty good. All right. If there's anything else you want to talk about, please let me know now as we're going to ride out into the sunset. I love you guys very much. I want to thank Brian P., Mr. Dividend, for his $2 donation. I humbly appreciate any donations as usual, and especially from the members of the channel. Thank you so much, because they already support the channel as well. And just make sure that you're going to be safe out here, and please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and that's why we have to have these hard conversations. It's real out here in life. You never get a pass. You work hard, then you die. But along that journey, there comes some easy days and there comes some hard days. But you try to make it easier if you have financial means coming in every month that can change your life. So if anybody's watching this that is younger, let's say you're just now graduated from high school and you're only 20s or in your 30s or in your 40s even, you need to pack away something so therefore you have revenue coming in. You have no guarantee of any revenue from the next day or the next day after. So start putting something away now. So 20 years from now, you'll have a little nest egg. So you have some passive income flowing through your household. All right. So keep all that in mind. And also, it's hard out here for a lot of people. 70% of the population is living paycheck to paycheck. So that tells you people are going to be under stress. They're going to have problems financially. That is the leading cause of divorce. All kind of hard times happen because of money, the lack of money. So again, think about this in your future. Everything is going to cost double in the next 5 years than what it costs now. Just remember this. There's no way around it. More borrowing is going to happen. All right, more lending. That's inflating the currency supply, and at the same time will incur inflation. Just keep all this in mind. All right, so if you understand that's your standard, then now you know what work you have to do. And all I know is we're putting a lot of our candles in a bucket, and we're putting the bullets in the chamber to make investments, and you're going to have to put them in investments that give you a return. No risk. Don't start doing risk stuff. Don't go, hey, I think I'm going to be able to do this. Like we're talking about this RV park. That's a business you're starting, which is high risk. But is it high risk if you know there's a market for it and you can easily prove that this is going to be a market? I can easily prove if I can get somebody to get a place that can sleep up to 4 people in a 2-bedroom, 1 bath or 2-bedroom, 2-bath RV, I know I can charge $900 a month in an RV park and people are coming. I know for a fact. And especially if my RV park has showers, a pool, and a little playground or something, a snack bar or something. I mean, we know it's going to be good because people have to pay double that for their family of 4 in a lot of places. So there will be a market for it, whether it's to buy the RV, the used RV that we fixed up, or to just charge $900 a month and you stay in this RV. Either way, I like this model in today's world. Anything that you can charge somebody like $1,200 and under, and a family can live there or a couple can live there, I think that is going forward for the next 50 years. That's a model. You can't lose. The only way you lose, insurance and property taxes rise. That's the only thing that you can't deal with. But there you have it. There's pros and cons for everything. So with all that said, just make sure you keep your head up, ladies and gentlemen, because again, you never know how hard it is. And everybody knows the ending, and I'm looking for the end. But now I'm out.